$2 billion, 4 days. Let that land for a second. In 4 days, two separate entities announced they are buying XRP directly off the open market, not OTC, not pre-negotiated blocks from Ripple's escrow, off the open market. That means competing against you, against me, against every retail investor sitting on an exchange right now for the same pool of available supply. And while that was happening, one of those entities just filed to list on NASDAQ. I need you to stop whatever you're doing because most of the coverage you're going to see on this is going to miss what's actually happening. It's not the $1 billion that matters. It's what $1 billion hitting open market liquidity does to a token that is already running out of available supply. That's what we're breaking down today. Stay with me, because by the end of this, you're going to see a picture that most people are completely missing. Welcome back. I try not to do hype here. You probably know that. What I do is sit with the data until it tells me something worth saying. And right now, what the data is telling me is unusual enough that I want to walk through it carefully, step by step, because the noise around this story is loud and I want to cut through it. Let's start from the beginning. Here's the thing most people don't understand about institutional treasury vehicles. When a hedge fund or a whale wants to accumulate a large position, they don't just log into Coinbase and market buy. The slippage alone would destroy the trade. So what do? They go OTC. They negotiate directly with Ripple or with large holders at agreed prices off exchange. That's how big accumulation has happened historically. What Evernote is doing is completely different, and that's why it matters. Evernote Holdings is a newly formed Nevada corporation. This week, they announced a business combination with Armada Acquisition Corp. 2, a publicly traded SPAC on NASDAQ. The deal is expected to trade under the ticker XRPN, and the headline number is over $1 billion in gross proceeds raised to fund open market purchases of XRP, SBI Holdings, Ripple, Pantera Capital, Kraken, GSR, Chris Larsen personally. These aren't random names. SBI is one of the largest financial groups in Japan and has been Ripple's closest institutional partner since 2016. Pantera has been in crypto longer than most people have heard of crypto. Kraken is one of the most regulated and respected exchanges on the planet. Now, here's what I want you to sit with. A publicly traded entity that is legally required to disclose its activities, backed by those names, with a mandate to buy XRP on the open market, is about to be listed on NASDAQ. Stay with me, because what I'm about to show you explains why the price hasn't moved yet, and why that is actually the point. The reason this structure is being built before prices run is because once XRP gaps upward, buying at scale becomes almost impossible. The slippage, the thin order books, the panic selling that doesn't happen fast enough to fill institutional demand. That is the moment these vehicles are designed to be already positioned for. Think about what happened when Bitcoin ETFs approved. The price didn't just go up. The available supply on exchanges dropped sharply within weeks. BlackRock was pulling Bitcoin off exchanges before most retail investors even processed what the approval meant. This is the same mechanic being designed right now around XRP. The public NASDAQ structure means it's not hidden. It's just happening faster than most people are processing it. Evernote is also planning to operate XRP validators, participate in DeFi on the XRP ledger, and use Ripple's RLUSD stablecoin as an on-ramp into XRP-based yield opportunities. This isn't just a treasury, it's infrastructure for how XRP eventually moves at institutional scale. Here's the number that should stop you cold. Write it down. XRP's total supply is fixed at 100 billion tokens. That's it. There will never be more. Out of that 100 billion, roughly 55 to 57 billion are in circulation. The rest sits in Ripple's escrow, which unlocks 1 billion per month, and most of that gets relocked. On an average month, maybe 400 to 500 million net new tokens actually enter the open market. Now look at what's already leaving exchanges. Exchange reserves have been dropping for months. Data from on-chain forensic analysts shows the available liquid supply shrinking in a way that hasn't been seen since mid-2021. And now into that shrinking pool, add this. Evernote just committed over $1 billion to open market purchases. Last week, Ripple itself announced another vehicle with a similar mandate. That's $2 billion, 4 days, hitting a market where the liquid float is already thin. Let me do the rough math, not as a prediction, but as a physical reality. If XRP sits around $2.50, $1 billion buys roughly 400 million XRP. That sounds like a lot, until you realize that's almost equal to the entire net monthly release from Ripple's escrow. $1 billion from one entity absorbs the entire monthly release. $2 billion absorbs 2 months of net supply, and that's before Pantera is buying, before Kraken is buying, before any other vehicle that announces next week is buying. Here's what that math is telling us. This isn't a prediction. It's a supply and demand equation. Increasing institutional demand meeting decreasing available supply. The price does not have a choice about what happens next. The math doesn't lie, and I don't know how to say it more simply than that. Now, let me add the other side of this. Corporate treasuries globally wired $145 trillion last year. $145 trillion. That's the market Ripple just stepped into with its acquisition of G Treasury. Because what G Treasury does is treasury management, automated cross-border payments, cash flow optimization for corporations. Ripple just bought the infrastructure to plug XRP into that flow. Even if XRP captures a fraction of that 145 trillion in annual payment volume, the velocity required through the network justifies a price per token that most people in this space aren't willing to say out loud. I'm not going to say a number. I'll let the math speak for itself. Okay, I need to tell you something about how institutions actually behave. They don't announce things and then wait. By the time you're reading a press release, the positioning is already underway. The announcement is the trailing edge of the decision, not the leading edge. Brad Garlinghouse posted about Evernote this week. He called it something special. Brad does not publicly back projects out of generosity. Every statement from Ripple's CEO is measured. He called out SBI Holdings, Pantera Capital, Kraken, and GSR by name in that post. That's not a casual endorsement. That's a map of who else is building positions right now. Chris Larson, Ripple's co-founder, said he is investing 50 million XRP personally, his own XRP, into this vehicle. The man who helped build XRP is now personally deploying 50 million tokens into a publicly traded structure that will hold them in institutional custody. Meanwhile, Visa just published a new tokenization report and highlighted RLUSD specifically as one of the global stablecoin leaders. Visa, not a crypto native, not a pro-XRP YouTuber. Visa, alongside PayPal, USDT, and USDC. That report is being read inside Treasury departments and compliance teams at major financial institutions right now. Franklin Templeton's on-chain money fund recently crossed $800 million in tokenized government securities. BlackRock's tokenized treasury fund hit a $2.9 billion market cap. These are not experiments anymore. The tokenized asset market has grown from $5 billion in late 2023 to $12.7 billion now, and McKinsey projects the total reaching somewhere between $1 and $4 trillion by 2030. I personally think $4 trillion is the floor, not the ceiling. Here's what this tells me. RLUSD getting Visa coverage is not random. Ripple's RLUSD is being positioned as the on-ramp for institutional DeFi on the XRP ledger, which means every tokenized asset moving on to that ledger creates demand for the settlement layer, which is XRP. Also, I want to mention something that came across my feed this week, and I'm not going to oversell it, but I'm not going to ignore it either. A well-sourced account called Lord Belgrade, who has been right about Ripple-adjacent moves before, posted a statement this week about meetings that included ECB representatives, major European banks, Ripple executives, and people linked to Elon Musk's ventures. The topic was interoperability, liquidity, and financial infrastructure. He said something big is coming and we'll share more when the time is right. I can't verify that. I'm telling you it exists. Draw your own conclusions. So what are the actual catalysts on the board right now? First, the Evernote SPAC closing. Transactions like this typically close within 3 to 6 months of announcement, pending NASDAQ listing requirements and SEC review. When it closes, XRPN becomes a publicly traded vehicle with a legal mandate to accumulate XRP. Institutional funds that can only access crypto through regulated equity vehicles now have a way in. Second, XRPETF. Jake Claver, whose analysis I respect even when I find parts of it uncomfortable, put 95% odds on the remaining crypto ETF catalyst landing before end of year. I don't know if that number is right, but the regulatory environment has shifted enough that it's not a stretch. Spot XRPETF approval takes the addressable capital pool for this asset from retail to effectively infinite. Third, G Treasury integration. Ripple just acquired a corporate treasury platform. The roadmap there is 24/7 cross-border payments and liquidity optimization on a unified platform for corporate finance teams. When that product is live and deployed inside enterprise treasury operations, XRP becomes embedded in cash management systems at a level retail can't really see from the outside. Fourth, the tokenization wave, McKinsey's 1 to 4 trillion projection for 2030. Visa's report on RLUSD. Franklin Templeton already live. BlackRock already live. Every tokenized asset flowing through the XRP ledger tightens the supply picture further. These aren't maybes stacked on top of maybes. Each of these things is already in motion. The question isn't if, it's whether you're positioned before or after the price reflects it. I need you to understand something before we get to the closing. This isn't about price. This is about access. Here's how this plays out. Evernote closes its SPAC. It starts buying XRP on the open market. Another vehicle announces, and then another, because when two announce in 4 days, it tells you there are probably 5 to 10 more in formation that we just haven't heard about yet. Each vehicle locks XRP in cold storage or multi-sig custody. Those tokens are not coming back to an exchange for a 20% profit. They are gone from the liquid float for years. At some point in this process, the math I showed you earlier becomes obvious to everyone at once. The slippage model breaks. You can't buy a meaningful position anymore without moving the market against yourself. That's the window, not the after, the now. And I'm not saying that to create panic. I'm saying it because the mechanism is real, and I'd rather you understand the mechanism than react emotionally either way. Once a token enters institutional cold storage in a publicly traded treasury vehicle, the retail market never sees that supply again. Think about that. Not until prices are multiples of what they are today does any of that supply become attractive for a sell event. We are moving from an era where XRP is abundant on exchanges to an era where it isn't. That transition doesn't announce itself with a news alert. You look up one day and the price has moved, and the liquid supply to buy at the old price is just gone. Look, I know some of you have been holding XRP for 2, 3, 4 years. I know what that feels like. The price moves sideways. The news sounds good and nothing happens. You start to wonder if you're the one who's wrong. I'm not going to tell you that I know exactly when this changes. Nobody does. Anyone who gives you a specific price by a specific date is guessing, no matter how confident they sound. What I will tell you is this. The signal has never been stronger or more specific. This is not institutions vaguely talking about blockchain. This is specific entities publicly raising specific billions of dollars to buy a specific asset on specific exchanges. That's a different category of signal than anything we've seen in the past. The red candles, when they come, are not the story. The institutional accumulation happening beneath the surface is the story. The noise is loud because the window is closing. That's not a coincidence. Being early feels like being wrong, right up until the moment the rest of the world catches up. The people who bought Bitcoin in 2013 looked ridiculous until about 2017. The people who bought in 2017 looked ridiculous until about 2020. Timing is always uncomfortable. That's what makes the position worth holding. The question I keep coming back to is not whether the price will reflect this fundamentally. The question is who will still be holding when the price they thought was the ceiling becomes the new floor. I think you know the answer. So let's bring this together. In 4 days, $2 billion of institutional capital announced it is entering the open market for XRP. One of those vehicles is going public on NASDAQ. Brad Garlinghouse endorsed it. Chris Larson put 50 million of his own XRP into it. Visa named RLUSD in a global tokenization report. Ripple bought a corporate treasury platform that moves $145 trillion a year, and the liquid supply on exchanges is already contracting. This is not one signal. This is a cluster of signals pointing in the same direction. Comment XRPN below if you watched this all the way through. I want to see who's actually paying attention. And subscribe if you want to be in the room before the room is full. The informed don't wait for permission. They position while the crowd is still asking questions. I'll see you on the other side.